Ben ritrovati lunedì mattina sul floor del New York Stock Exchange, un ritorno alle contrattazioni dopo la giornata negativa di venerdì scorso. Ne parliamo con il mio ospite qui sul floor, come vedete come ogni lunedì, è Kenneth Polcari, Managing Director per ICAP Equities. Kenny, thank you so much for being with us again.
Thank you for having me. It's always a pleasure.
Pleasure is all mine, as you know. So Kenny, we are trying to fight this morning. Friday was a really bad day after the job report. We saw the Dow Jones really losing all the ground that it gained throughout the year. And this morning we are fighting. I mean, in this moment the indexes are mixed. What's going on?
Well, you know what? It's the market feels like it's taking a little bit of a breather after what happened on Friday. Certainly the market was under a lot of pressure on Friday, got caught way out of left field with the jobs report. And so therefore today, over the weekend, people had a chance to sit down and think about it. Certainly Asia reacted very negatively because this morning was their first opportunity to react to it. Europe, though, opened weaker and then has actually rallied back. London being closed is causing some muted response. But over here in the States, it feels like investors are trying to regroup, right? Trying to figure out where they're at. We've broken some key technical levels. 1284, which represented the 200-day support line, will now be short-term resistance. So now we're in between this 1250, 1284 range, and the market's got to find its way. So it's not by any stretch panicking today. There wasn't a whole lot of macro data this morning, but the macro data that did come out was once again negative. Factory orders disappointed. And why they say it disappointed, look at the reports that have been out for the last 6 weeks. They've all disappointed. So why should this one be any different? And so you see what the market's doing. It's trying to find its way. So we're between minus 25 and plus 10 and minus 25 and plus 10, trying to build a base. I think though the base is closer to 1250.
And also there is a valuation issue now. We are 19% since last year for the S&P 500. And for some people, that will really mean that investors are very negative and probably they are waiting for some more slowing down. But for some other people, this is a great chance to come in.
Well, it depends on your point of view. And if you're a long-term investor, days like Friday and even today and even the days going forward are going to be great opportunities if you have a longer-term perspective. If you have a 5 or 8 or 10-year time frame, I think that you look for days like this to jump in, right? When Wall Street's on sale, people should jump in, right? When you can buy things cheaper than you could a month ago, and they're good quality names that have just kind of gotten beaten up because of more global issues, then I think you have to take that opportunity and seize it.
And now going back to the economy, after the data that we saw in the last few weeks, a lot of economists are now revising down the GDP for the next quarters. Right. This week we're not going to have many indications. It's pretty light, but Ben Bernanke will go to Congress and of course he's going to testify on economy, and a lot of people are waiting for some hints.
Right, and I think the best you'll get out of that is maybe some hint. There's certainly not going to be any policy change announced on Thursday. He's going to talk about the economy. He's going to talk about what Congress needs to do. He's going to talk about how they need to come together. But don't forget, we're in the throes of our election, right? So a lot of people are frustrated because now we're going to hit kind of gridlock, even more so than we've had, and people don't expect a whole lot to get done at all because neither side is going to compromise. But he's going to talk about there needs to be this need to compromise. He needs some help from the fiscal side of the equation, not just the monetary side of the equation. But I think he's going to try to say stuff that at least will help calm the markets. Now, whether or not it works, we'll see. I think, by all accounts, you're right. This week is a quiet week. We got the Bank of England and the ECB on Wednesday announcing their rate decisions, or at least announcing. And so we'll see the direction we get from them. But like I've said before, is that the European news is going to continue to trump just because it's so volatile at the moment. And with the Greek elections coming up, and we already have a sense of where that's going, is that this left-wing party seems to be gaining some speed, and to have this untested 37-year-old politician who's already said that he's not so sure he's buying into this whole austerity bailout thing, I can't see the Europeans, led by the German and the French and the Spanish and Italian, giving this guy in this country now all this new money when he's already said, I'm not buying it. So it's going to be it might be a rough couple of weeks.
And also because of Spain. I mean, the banking sector is really in trouble, and now there are some hopes on the market. A lot of reports during the weekend, but until we don't see an announcement, we cannot be sure.
And that's right. And so people will, they'll trade on some hope. But listen, that conversation could go on for a while, right? And now we've got this. Today they announced this master plan for all of Europe. Well, that's a conversation that's going on for 10 years. So that's not something that people got to bank on today, tomorrow. They shouldn't be trading necessarily on that information. That might actually offer some support, short-term support, but by no means should people be trading on this master plan idea, because that's a conversation that's going on for a long time.
And it's going to be very hard to have anybody agree on that.
Absolutely. Very hard.
Now, very briefly, QE3 or not QE3, we talked about this for a long time. We saw that nothing has been done for the unemployment, and why should we work this time?
Well, see, and that's really the fear now, because really when you think about it, it would really be QE4, because we had 1 and 2, we had Operation Twist, which was really a third program, right? So now if they announce a fourth program, the sense is we've gone through this 3 times, and each time after they've ended the program, the market rolls over, the economy rolls over. We're certainly not strong enough. And so now people are even going to wonder, if they announce a fourth program, what's it really going to do other than put us deeper in debt? And so you might get that short-term burst, but in fact, it may end up coming back to bite everyone in the backside. And I think they have to be very careful about that. But they have to say something, but they have to be careful.
That's why we're mentioning that maybe they want some fiscal support more than monetary policy.
Right, and they're going to need that, and I think that's what Ben Bernanke is going to say to Congress, is that he really needs help from them in terms of fiscal policy, because clearly the monetary policy that we've employed over the last 3 or 3.5 years, it works temporarily. It artificially stimulates the economy, it artificially stimulates the stock market, and then we roll right over. And that's a reason why you've got a lot of people in this country and investors worldwide that are losing confidence in the equity space in general, because they can't get a handle on it.
And would a Bush cuts extension help?
Well, that's a whole nother conversation. At the end of the year, we're going to lose those cuts. We're going to have these automatic spending cuts, which are only going to exacerbate any problem here. So my sense is, I think in the end, Obama's got to pull a rabbit out of his hat if he's got any if he's got any hope of another election, right? So is he going to come to the table and extend those cuts? I think we will see that. I think it's going to be very hard for the government and for the administration to get rid of the tax cuts and then institute those automatic spending cuts that are going to hit us on January 1st.
We'll see. Thank you very much, Kenny.
Thank you.
E grazie a voi per l'attenzione.